In this video, guys, we're going to look at trading strategies that allow you to use tight stops. Stay tuned. Hey guys, well, welcome to Right. So I'm going to give you a kind of broad overview of 4 strategies that I think you can use tight stops with. Now, do you exclusively want to use tight stops with these? Probably not. There are some conditions where you want to give stuff a bit more room. And now it's also worth thinking and worth reminding you, from my perspective, I think that you've got to be careful with tight stops because you can get the death by 1,000 cuts syndrome where you're getting stopped. And in reality, if your stop was just wider, you wouldn't be getting stopped multiple times. So it's something to use under certain conditions only. I know that many traders like to use tight stops because the perceived value of that is that you can risk less, so you can increase your position size. You've got $1,000 risk, $100 risk, $10,000, $10 risk per trade. You can go, right, well, I can have more position size because my stop is tighter. So use with caution. But let's look at a broad overview. The first thing is the flag pattern. So flag pattern, as you know, guys, is one of my very, very favorite patterns. You know, fortunately, it's been really useful to have that tool during this trading year, just purely because of the conditions of the market. You know, are all flags the same? No, they're not. But that concept, that kind of approach just works so well. I've emailed me and messaged me and said, hey, you know what, that's helped me so much. So, you know, it's one of those things that happen to be good in the current conditions. Will it continue? I think it will. I think it's going to continue. These kind of conditions will continue for the next few years. Even if they don't, you know, there's other strategies. But the point is, the idea is momentum drive. It's a pause. We've got filters and ways that we look at things, but ultimately you're looking for a specific point in time where supply demand shifts and a resumption of the trend. And when you see that, you pull the trigger, you take the trade, and your stop can go in tight because you're not expecting it to mess around and kind of retest and things. That's not the nature of the beast. It's not like a broad unwinding type trade. We got the cup and handle where it's just slowly winding. No, the flag is the momentum, the pause, the things that we look for in the pause, and then the final trigger that we look for to see that continued momentum. If you're right with that trigger, you can have the stop tight. So it's one of the ones where you can use a nice tight stop with that. Then one is a break and retrace. So the classic breakout, pull back to a level. You can have your stop under that level after it's popped off the level. So it breaks through the level, comes back to the level, wait, then it starts to go. Your thesis is that that's when the supply demand is going to shift back into demand off the key level. You're in, you don't want to see it back under. It's not quite as tight stop as some momentum type plays, but if you're timing it right, then you're well within your kind of the remit of the trade to go, yeah, you know what, I'm going to put the stop tight. Not always with that setup. It's probably the loosest one of the lot, but it's one where, you know, under the right conditions, if it's a powerful rip through a quick pullback, maybe even a pin bar and an acceleration off, you can have that stop tight. You don't need to give it room. The idea of the trade is that's going to be the turning point, the pivot point where demand comes flying in. The other one is exhaustion. It can be difficult to time this if you've got less screen time. It's just putting the time and watching this. But generally speaking, you know, it's going to be at a level, big flush, loads of volume, it bounces back off it. Now you might say, well, how's the tight stop work, Mark, with this? Because ultimately if you're putting a stop there, it's not very tight, and very often that's the problem with exhaustion. And I agree with you, that's a challenge with exhaustions. If you've got it to stop under the low there, it's too far. So you look for the next phase after that. So there's your exhaustion, and if that's in a downtrend, there's your exhaustion. That's just your alert to the next candle. And this is kind of the concept of the filters and triggers thing, but not quite. We have the exhaustion. The next candle is your momentum candle off that low. Well, that's when you can go, right, we've had the downtrend, we've had the exhaustion, chances are it's going to reverse. There's my momentum candle, there's my first green. I can put my stop just below that first green. Tight stop. Premise being momentum is going to continue off that. Now, just a word of warning, guys, with the exhaustion type trade, be careful because very often it can come back over a longer period and do a double bottom. That's how double bottoms tend to work. You get the first exhaustion, bit of some demand coming in, then it rotates back, it's not quite ready to go, then maybe goes for longer things. So scalp only, in my opinion, on these ones, guys. Scalp only, grab what you can off that, move on to the next thing. Fourth and final one, guys, the intraday reversal. I love this one under the right conditions. We haven't had it recently, I'll admit that. Much better off with the momentum type trades. But when you're in bear market conditions as well, this one's beautiful. Specifically on the US indices or European, any indice. or any index, should I say, and again, work beautifully when you've got momentum to the downside on your daily chart. You get the intraday reversal, which is against your uptrend. Everyone's feeling happy, everyone's buying, everyone thinks it's the low. Chug, 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 up we go. There's your VWAP maybe. And then you just get literally the rug pulled, starts coming down, and it builds momentum. And the sweet spot with this, guys, is, and I'm kind of rushing what is a really good setup into a very small time period just to kind of cram stuff in as I can. This final hour is when it works best. So when you have the bell, i.e. stock exchange is going to close, no one can trade stocks anymore with any size, some after hour stuff, of course. There's an urgency to it. So not only is there the intraday reversal of price, but there's an urgency as well. And, you know, like I say, I go into a lot more depth of this, guys, and other stuff, but very quickly, when you kind of go through that low, that's the one you can use a tight stop on, because the momentum it's a panic trade. You've got all the hallmarks of panic, all the attributes of panic, and then you're selling through the low. One of the very few times you're happy to take a breakout trade with size through the low, and your stop can be pretty tight because you've got all the panic, and then you've got extra panic of all the stops, and you've got the extra urgency of it being a small window of time until the close. The thesis doesn't allow for it to push back. It's like it's going to push right to the close. And last tip with that one, guys, is hold it to the close. You know, trail your stop by all means, but you know, most of the time under the right conditions, like I said, at the moment when I'm filming this, we've not had this for a while, but it's there, and when it's time to use it, it works really, really well. You just you just kind of hold it to the close and look for that press, and you can get some really good kind of momentum on that. But the theme of this, guys, is the tight stop theme. We've gone off on a tangent now because I get excited about some of these setups because they're so powerful. Have a look through. Flag one, break and retrace, the exhaustion, and intraday reversal. Those, I think, are some of the trading strategies that allow you to use tight stops. Whatever you're doing, guys, keep that risk managed. Take care, and I shall see you in the next video. Bye-bye.